In this video, I am going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from January 3rd, 2022. This video will be in two parts. First, I will do the technical analysis on the weekly chart, and then I will do the technical analysis on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. Also, I would like to welcome you all to the new year, that is 2022, and this is the year of bubble. So year 2022 is the year of bubble, and this bubble, this particular bubble, okay, it is not seen in Dow but in SP 500 index. Dow, it made this all-time high of 36,680 on December 30th, okay, and Dow gained almost 24% or 25% from January 2020. So in last 2 years, Dow has gained only 24 or 25%. So that is normal. That is not a problem. But the S&P 500 has gained more than 40% in 2 years. Okay, and this is the and that is the reason why the market is in bubble. So we are expecting this particular year 2022, okay, probably in the first quarter, in the last leg of first quarter, or somewhere around like the mid of the second quarter, the market will come down. Market will correct itself. Okay, now in terms of S&P 500, so I did the technical analysis for S&P 500. You can watch the video. Okay, so like how much that is expected to come. But in case of Dow, I'm expecting Dow to come down maybe like 10% to 15%. Okay, so 10% to 15% correction in Dow. So if you see that Dow, it made its all-time high of 36,680 on December 30th. And if you see my last technical analysis, my previous technical analysis of Dow, so I told you that whenever you see Dow has breached the level of 36,110 and 36,190, then it will shoot up, and it will shoot up towards 36,650. No one can stop the Dow. So, and when it hits 36,650, then it will hold. Okay, and because this is a very strong resistance. So 36,650. If you see here, it was 36,680, and this is where, okay, it all happened. So it moved up, it hit 36,650, 680, and then it came down. Okay, so again, my support and resistances, they are extremely sensitive. Okay, so whenever market hits my support and resistances, okay, something happens here in the market. Now let's do the technical analysis here. So I will do the technical analysis first on the weekly chart. Okay, guys, so this is the weekly chart. Weekly chart means one candle represents 1 week. Okay, not 1 day, 1 hour. One candle means 1 week. So if you see on the weekly chart, there was this previous candle, okay, that was formed for the week of December 20th. It was a bull candle. Okay, this is why I told you that there are a very heavy chances that market will move up. Now market has moved up. Okay, it formed its all-time high of 36,680. This is again a bull candle. Okay, but there was some retrace in last 2 days, but it is still a bull candle, which means that there are bull sentiments in the market. Clearly there are bull sentiments in the market, back to back 2 bull candles. Okay, so this is the interpretation of this candle. Now let's do the technical analysis here. First we have the Bollinger Band. If you see that this is the upper band of the Bollinger Band, market has crossed the upper band of the Bollinger Band, formed an all-time high, and then it came down. And we have the median of the Bollinger Band. So market is in between the upper band and the median, which means the market is bullish. Now the moving averages, if you see the moving averages, there is a clear fan out, which means the market is bullish. Now if you see market is moving above the Ichimoku cloud, on the bull side of the Ichimoku cloud, which means market is bullish. Now some other technical indicators. Sorry. Okay. Now if you see the MACD is still bearish, but now it is marginally bearish. Okay, but it is still bearish, because if you see the MACD is 478 and the signal is 506. So if in the coming week, if the market moves up or if market holds here, in that case we can see a confirmed MACD reversal, means from bearish to bullish. But as of now MACD is bearish, marginally bearish you can say. Then we have stock RSI. Stock RSI is bullish because the K channel is around 48 and the D channel is around 41. Okay, stock RSI is bullish. Then we have divergence. Yes, so divergence is increasing. Okay, that is good, because when the divergence hits the historical levels, then market will come out. Then the market will come down. Okay, and like I told you that we are in the year of bubble. Okay, so whenever it hits the historical levels and the market comes down, so then market will enter into the correction. Now the momentum. So on the weekly chart, no, momentum is not there. So which means that that momentum is not there for for the bulls and the bears. So through all of the technical indicators on the weekly chart, it is clear the market is bullish, except the MACD that is saying that market is still bearish. Okay, and it was the MACD that brought down the market from all-time high to this level. So you cannot ignore MACD. You can and you must never ignore MACD, because MACD is the most important technical indicator that looks into the divergence in the price. Okay. Now we will move on to the daily chart to see what is most likely to happen and what is most likely to happen and how exactly it is going to happen, as we always do. So let's move on to the daily chart. So we are here on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not a week, not a month, okay, not an hour, but one candle represents one day. So we are here on the technical analysis, okay, and this is the daily chart. So let me first write down the support and resistances quickly. Okay, so it is 37,150, 37,150. Okay, now we come to the next part, that is again the same 36,655, 36,655. Okay, then we have a very good support at 36,110. So in my previous technical analysis, okay, in my previous videos, I have told you the importance of 36,110 many times. Then comes 35,700, 35,700. Then comes 35,425, 35,425. Then comes 35,110, 35,110. Then comes 34,780, 34,780. Okay, yep, so that's it, 36,000. Yep. So let's keep it up to here. So from 34,780 to 37,150. Now let's do the technical analysis. Okay, so first Bollinger Band, we have this upper band of the Bollinger Band, and we have the median. Market is moving between upper band of the Bollinger Band and the median, which means the market is bullish. Now comes the moving averages. There is a clear fan out, which means the market is bullish. Then comes the Ichimoku. So market is moving above Ichimoku, So which means the market is bullish. Then comes some other technical indicators. If you see MACD, MACD is clearly bullish. If you see stock RSI is also bullish. So you can see the K channel is 92 and the D channel is 96. So it is not bearish, but it is bullish. Okay. Then comes the divergence. So divergence is not much. It is just 57. It has to be more than 65 or 70. Then only it will create some impact on the market. Now the momentum, so momentum is building up in favor of bulls, but it is not much. So as of now, through all of the technical indicators, it is clear that the market is bullish, clearly bullish. Okay, means there are bullish sentiments in the market. Secondly, market formed the previous all-time high of 36,565 on November 8th. Then market breached this all-time high on so this was 36,565. This was 571. Okay, so market breached the previous all-time high on 29th, on this December 29th, and then finally it formed this this all-time high of 36,680. Okay, so which means that the sentiments in the market are bullish because market has breached the previous high. Okay, which means market is expected to move up, okay, towards this 37,150. Okay, sentiments are bullish, market is bullish, everything is good. Now let's see how it is going to behave, or how it is going to react, okay, or how it is going to work in the coming week. Okay, see, on December 30th and on December 31st, okay, you can see that there are two bear candles. So what is most likely to happen here is market is trying to hold here. Okay, that's good because it was here with the previous one. Okay, now it has this immediate support at 36,110, and this is, and I've told you the importance of 36,110 many times in my previous videos. So now expect this moving average to move up and to hit 36,110. Then expect market to come and hit 36,110. It is going to meet, market is going to meet the moving average on 36,110. Okay. Once it comes down here, then it will find very heavy support, and from here, then it will move up. Okay. This is the most likely case that is expected to happen in the market. The second case, we have this moving average. It will come, it will be here around, somewhere around here. See, we have the previous this range, then we have this range. Yes, somewhere around here you can say. So market, if market breaches 36,110, it will come down to this level. This is how much? This is around 35,875. Okay, or 35,800. Simple, 35,800. 35,800. 800. Okay, so it will come and it will hold here. Now it is not expected to go below 35,800, and if anything happens, see, whenever it comes below 36,110, around 35,800, it is expected to happen intraday. Intraday means for example, see, just look into this candle. Okay, if you look into this candle, it came down here and then it retraced. Sorry, it came down and then it retraced, and then finally it closed here. So this happened intraday. Okay, now this is what I'm talking about here. It is expected to come down here intraday. Okay, or maybe it will find some support here. It will also be there. Okay, so very heavy support around 35,800. It will come down and then it will retrace intraday. Okay, because market will try to hold around 36,110, which means whenever it comes down, it will then again retrace. See, market is bullish, sentiments are bullish, which means whenever market comes down, it will try to rebound, it will try to retrace, and that is the most likely scenario. Okay, so this is the scenario that is most likely to happen, and other than that I'm not expecting any other scenario. And then rest depends on the news, particularly on that COVID news. This is COVID yeah, Omicron news. Okay, the hospitalization and other things. Okay, and if everything remains normal, then market is expected to follow this path. Okay, so guys, I have given the link to my Discord spreadsheet in the description of the video. You can take a look, and also I have given the details or the link to my options trading profit strategies program. Okay, so you can also take a look. Guys, this was my technical analysis for the week of January 3rd, 2022.